Hello, I've returned with another ADH Wealth solution. Today, we will begin to discuss fulfilling all of your financial needs. As always, this is a basic description. For an evaluation of your own, please schedule an appointment. My information is in the description. Lastly, make sure you hit the like, drop a comment, and if you're new, subscribe and hit the notification bell so you're made aware every time I release new content.
Yo, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I've returned today to whap and tap on your head with some more cash commandments. Today, we're going to be reading from annuity.org about annuity beneficiaries and some of their death benefits and payout options. Before we begin, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, you can contribute to channel growth by donating. The information is in the description. You can purchase life insurance up to $1 million directly with an instant decision and no medical exam. The information is in the description. You can schedule a one-on-one consult with me. The information is in the description. As we proceed to give you what you need. So I've been talking a lot about annuities, and here are some of the things you should know about an annuity. An annuity is a life insurance product. And here we're going to look at annuity beneficiaries, death benefits, and payout options. So, and if an annuity contract, which is an IRA, just so you know, annuities are IRAs. If an annuity contract has a death benefit provision, the owner can designate a beneficiary to inherit the remaining annuity payments after death. The earnings on an inherited annuity are taxable. How inherited annuities are taxed depends on their payout structure and whether the one inheriting the annuity is the surviving spouse or someone else. So now we're going to jump to a few of the death benefit types. Actually, before we go to the types, let's take a look at what happens to an annuity when you die. So an annuity is a financial instrument that accrues interest on a tax-deferred basis and protects against market risk and longevity risk. Because annuities offer many benefits, lottery winners, retirees, and structured settlement recipients use them to create predictable cash flow for their present, their future, and even after their death. Depending on the terms of the contract, annuity payments will end after the death of the annuity owner. But annuities that have a death benefit provision allow the owner to designate a beneficiary to receive the greater of either all of the remaining money or a guaranteed minimum. This means an annuity held by a parent, spouse, or another loved one can be willed to a person named as a beneficiary. Annuity owners work with insurance companies to create custom contracts that specify payout and beneficiary options. After an annuitant dies, insurance companies distribute any remaining payments to beneficiaries in a lump sum or a stream of payments. It is important to include a beneficiary in the annuity contract terms so that the accumulated assets are not surrendered to a financial institution if the owner dies. Similar to setting up a life insurance policy, owners can customize their annuity contract to support their loved ones. The number of payments remaining upon the death of the owner depends on the details outlined in the contract, including the type of annuity purchased and inclusion of the death benefit clause. So now we'll look at the annuity beneficiary options. Annuity owners provide a sum to beneficiaries that is predetermined by the type of death benefit written into the annuity contract. Primary death benefit options include standard and return of premium and riders. A standard death benefit. This benefit has the least value, and the owner does not incur any extra costs. The insurance company pays beneficiaries the value of a contract less any fees and withdrawals. The contract value is determined by the day the insurance company receives proof of the annuitant's death or when the beneficiary files a claim. For some variable annuities, this benefit can decrease in value. For example, a beneficiary might report the annuitant's death on a date when the stocks are underperforming. Return of premium. Return of premium has a higher value and may cost an additional 0.05% a year, while some contracts include this death benefit at no extra cost. With the return of premium benefit, either the market value of the contract or the sum of all contributions minus fees and withdrawals determines the inherited amount. The insurance company pays whichever is greater. Stepped up death benefit rider. A rider is a provision to a contract that can be added when the contract is created. In the case of an annuity death benefit rider, there can be an annual fee over the life of the policy. The riders can be different, depending on the company that provided the annuity and the cost. The specifics of the rider will be written in the annuity contract. The insurance company determines the value of a contract at each anniversary of the annuity's purchase. With a stepped-up death benefit rider, the beneficiary is paid the highest value amount recorded, less any fees and withdrawals, instead of the value of the annuity when the insurance company learns of the annuitant's death. Some insurance companies add a fee of 0.2% or more a year for this benefit. Additional riders. For variable annuities, owners can pay for an additional rider. The insurance company takes the highest value of the asset for the month as it changes with market fluctuations, and then pays benefits based on that value. Death benefits by type of annuity. Death benefits impact the total amount of money available for beneficiaries. The type of annuity, fixed, variable, immediate, or deferred, determines how much the insurance company pays them. There are general guidelines for determining the benefits for variable and fixed annuities. For most variable annuities, beneficiaries receive at least the original amount the owner contributed. For fixed annuities, the beneficiary receives the present value of payments. For some immediate annuities, such as a lifetime immediate income annuity without term certain, the insurance company keeps the money when the owner dies. However, the annuitant can purchase a refund option or a period certain rider, and a beneficiary would receive any remaining payments. For deferred annuities, the amount paid depends on whether the payments are in the accumulation or payout phase. Annuities in the accumulation phase pay beneficiaries the total amount contributed to the account. Once the annuity is in the payout phase, the beneficiary subtracts payments already made to the annuity. With the array of annuity options available and the customizable nature of contracts, the size of an inheritance greatly varies. Annuity owners can prepare for the future of a spouse or other beneficiary by comparing their options with an insurance expert. So, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth by donating. You can schedule a one-on-one consult, and you can purchase life insurance up to $1 million directly with no medical exam. The links are in the description. With that being said, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. And remember, when people challenge you, they don't challenge you to challenge you. They challenge you to challenge you. Accept the challenge. Salute.
Interested in having an evaluation? Find my contact info in the description and schedule a consult to explore your options. Have a financial question but don't know who to ask? Email me at a.hall@cgwealth.financial and your question may be answered in my next video. Security products are subject to investment risks, including possible loss of principal. Before investing, carefully consider the investment objectives, risks, limitations, charges, and expenses of the product and any underlying investment options. This information can be found in the product and investment option prospectuses. Copies are available from your registered representative.